Hello everyone and welcome. In this video I wanted to go over candlestick reversals, explaining the most common ones and a few nuances around them, how to use them for execution, and a few things to look for in these patterns in particular, okay, in regarding order flow, time, all of that stuff. So let's just begin, and I'll start off with the most common one and basic one in my opinion, which is swing failures, which are really, again we're going to be going candlestick reversals. Again, I could just sit here and say to you, look, trade you got a high, you swing failed it, and this is what it is, right? You're swing failing above the high, but there is a lot more nuance to it, and I think factors that you can be looking at rather than just is a swing failure or not. For example, one of the biggest factors for me is like the distance spent between the initial high being put in, which is this pivot here, okay, and then this high being the swing failure high, which essentially then swing failure, but you got all this time spent here. And why is that important? Well, if you're going to swing failure pattern a high, for example, the whole premise of a swing failure pattern is to stop people out or potentially get excess, well, excess in both ways, in the essence of people being stopped out of shorts, for example. So if you're short here, price rallies, you get stopped out. Alternatively, you got people trying to trade a breakout long, with a fairly tight stop. Either way, you're trying to wreck both sides of the market with a swing failure pattern. So that's why you can have all these different premises actually help identifying the best ones. That's why when someone's always says to me they trade swing failure patterns, there is much more nuance to it than just wick above, close below, or wick below, close above. In the alternate fashion, right? So there has to be time spent, in my opinion, between the initial high or low being put in and then it being tested again, and that can be sometimes a few hours. In this case, look here, so from 4 p.m. UTC all the way till 7, that's 3.5 hours worth of time potentially generating stops. You want at least a couple hours, because, and this is why a lot of people usually get wrecked if you've put an initial low, for example, and then price just tests it immediately again. There is no time to generate those stops, so you need that time there to generate enough stops to actually warrant a potential reaction from it. Okay, so you can see this time spent there, and then you can also check if you want to be additional. To be honest, I don't really check this too often anymore, but you can check from this point in with the initial high being put in and this being tested again. Is there an increase in open interest, okay, meaning new positions, and is there a decrease in CVD in this case, where you've got an increase in open interest, meaning new money is coming into the market, with negative delta, meaning that is new shorts coming in here, meaning that if price, where are those new shorts going to have their stops likely potentially above this initial high, where if this gets stopped, it could form a reaction, and that's, you get a bit of a pullback. Obviously, it wasn't the biggest pullback in the world, but this could have definitely warranted a trade, okay? So yeah, that's swing failure patterns again. The time between the tests is really, really important for me, as well as that, it's important to note the time frames to be looking at these on. For me, the more common ones, 5 minute, 15 minute, are my favorites. But those are the two to really focus on. Again, I can't stress enough the test between them, and there being significant time, because otherwise you could just be in, like I said, in a rampage of price puts in a low, swing failure, long, 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 and just continuously getting stopped out before it eventually either makes the moves or completely putes down much, much further. The next pattern, so hopefully that makes sense. The next one I'd really focus on is this engulfing candle situation. So I highlighted this from before, but this is really, really powerful because, and by the what I would say about that swing failure pattern one for the last one is that is strictly, swing failure patterns are strictly related to highs and lows, and I'm really focusing on both. It could be a major pivot that you're swing failure patterning, for example, so you swing failure patterned here, it's an obvious pivot, or it could be for internal, something like this, even something I even traded. Something more internal where you swing failure pattern, then internal pivot, and then see them move up, and it's strictly still based on a wick. And that's what I think. Swing failure patterns are strictly based on highs and lows and looking for the wick below, or the wick above and close below. That triggers your execution. Whereas something like this, which is now the engulfed candles, where what I mean by engulfed candle is you have this green candle here. It's blue in this case. We'll add this on. We'll add all these on. So we've got this up candle here, and then what price has done in the next candle next to it, okay, whoops, is price has wicked above it and closed all the way back below it, right? So it's engulfed that entire candle whilst also taking its stops in the opposite direction. that is not real. I don't look for that necessarily at points of highs and lows necessarily. So I'm not looking for this at strict highs and lows. I'm looking for this more at internal levels, such as naked point of controls, more volume based levels. Obviously, liquidity highs and lows is something, in my opinion, which I look at separately. But this type of formation, I'm looking at, in volume based levels. But it also can be seen at, failed auction type levels and stuff like that. But I'm much more likely to look for a swing failure pattern upon an initial high being tested than I am to look for this type of pattern, although you can have two together. Now, what this is doing is, and this is even better if, for example, this up candle at the time, right, has an excess in, spike in volume, and then obviously this candle here wipes that out. And very simple, these candles here, if we see something like this at a key level of interest, so let's just imagine this is so what I'll cover as well, another point is just this, probably somewhere on my channel, is my key levels of interest. I'm trading generally 30-minute naked point controls, 15 minutes, just stacked imbalances, stuff like that, where there's a lot of volume previously. So for example, there could be a 30-minute MPOC within here somewhere, like this marker I've just marked out, right? Let's just say it's up here, and then you've got people longing into the level. And in this case, imagine I didn't trade this; it's just an example with the candle formation to discuss. I mean, and you do get a large amount of open interest, so people longing into the level. Okay, followed by this engulfing setup. It's just instantly put offside all of these traders, as well as the ones in the wick as well of that engulfing candle. So that is it. And obviously, in this case, you would then look for a short entry here with your invalidation above the overall high. That can be the case, which is really useful. But just the whole premise of an engulfing candle is trapping a lot of traders and putting them offside immediately. In an aggressive nature, and this is really good because these two patterns are not familiar, and you can use them in two completely separate scenarios. One's where you're looking at highs and lows and swing failure patterns, and for external moves almost, and then this is more internal, where you're looking for a reaction off of maybe a fib level or a MPOC or wherever your strategy provides you as a level of interest to take a trade from. A VWAP, these into VWAP are really good, obviously on the maybe on the long side or whatever it may be. So yeah, there's tons of different ways to be looking at this, but the most important part there is, in my opinion, the volume kind of spike into this, followed by the engulfing. This is what people don't look at. If we just bring up Exo here, so something, for example, I'll just bring these up. What we'll do is this is just my Exocharts template again. I'll probably release this at some point soon. You can look at the volume, right? So what we'll do is we'll open a fresh tab. We'll open it on Bybit. It doesn't matter what we open it on. We'll open it on Bybit BTC USDT. Okay, 15-minute. Yeah, and you want to see within this. We'll change to 100. Right, you want to see within this candle here. The one that was just getting. The one that's being engulfed here. Let me make this wider for you as well. I do apologize. Let's make it massive. Where's that candle gone? I think that was on a lower time frame, wasn't it? Apply. Let that load. It's all the way back here now. So here, right, you want to be focusing. So this is the engulfing candle, clearly. Now you want to be focusing on two things. What is this candle's volume doing? Okay, this first green candle doing, and then the one that's about to be engulfed. And then what is going on within this candle here? Do you have trap buyers within the wick itself? Within this segment here, within that value area. And in this case, you do. So obviously, once you're looking down here, once price closes down here, you're getting your entry. All this, for example, if there was a spike in volume within this candle, you've then trapped this entire candle here, as well as all this value at the top is trapped as well. So that then gives you an entry. So that is what I'd be focusing on in relation to the open interest side of things here. In relation to that, hopefully that's not too. It doesn't make too. It's not too confusing on that aspect. I apologize, get my words muddled up there. But yeah, those are the two most prominent ones for me. Now, there's two other things I want to talk about, which lead nicely into this, because yeah, it's literally about trapping the value area. So essentially, these trap value areas, now you can see it's within both swing failure patterns and the engulfing candle patterns, like I said. a trap value area is literally where price closes away from its candles value area, which consists of, you know, potentially offside traders. So you can see down here, if we just show VA lines, actually what we'll do is we'll change the value area settings, right? So you can now see price closed up here. That all this selling down here is trapped, and so you've got a trap value area set up. Okay, so this is what you're really looking for in relation to reversals, in my opinion, for order flow. You can see price goes down here. You've got the value at the top, and it's really focused. You can drill in almost and go, what's going on within that value area? Are you seeing an open interest increase? Because in that case, you are actually seeing newly positioned traders become instantly offside, which could then aid for fueling the reversal. If for anyone that doesn't understand it, let me explain that now really quickly. If price is moving up here and you've got a lot of new longs here, and then price instantly moves away from those new longs and they're offside, they're likely to then close out of those longs. And when you close out of a long, you're inherently shorting, which will then aid any sort of further move back down for a reversal trade. So that's what that works in. It's this opposite for longing a move, but that's what that means. And then the very last point I want to talk about just briefly is the speed of reversal. This one, in my opinion, is actually really important. And this is just from my own trading and my journal and my testing, etc., that I've really picked up on this heavily. It's the speed of the reversal. Just moving back over to TradingView, you don't want a reversal, right, to be very slow. You don't want it to dwindle near your level, you know, consistently test and test and test. From my testing, you know, from everything that I've seen and my journal at least, especially with these reversal patterns, you know, this, for example, here, you've got, imagine this was a level of interest. This moved fairly quickly away from your level. You know, in this, it moved down. It never really moved back up, moved back up, moved back up, and then reversed. It moved down, and it, you know, it didn't really test back into that wick at all, if that, you know, anything, before seeing a reversal. If it does come back into there, that's a situation in which where I would likely close out of that short position quicker than usual to prevent myself taking a loss larger than I need to take. So, you know, yeah, and that's one of the also, you know, if price is grinding into the level, like I said, like this, well then grinding into it like this slowly, well, it could just onto just pop through it really fast. So you need to be paying attention for the speed in which price is moving into your level, right? Because when you are seeing excess trapped volume, people getting stopped out, etc., it's a fairly quick and prominent movement. It's not something that's drawn out, because then that just gives people the opportunity to get out, or it doesn't give as much punishment if it's a really slow move. So the move in should be fairly fast, and the move away should be fast as well. And that's, you know, spikes of volume, spikes and open interest, those type of things happen on those very quick moves into your very prominent levels. So yeah, I won't do too much there, but hopefully this has all made sense to you in relation to these reversal patterns. And if you have any questions on them, don't hesitate to ask away. There's a bit more to it as well in relation to diving into order flow, looking at liquidations, T-size groups, you know, using Exocharts for this stuff. But yeah, if you want, we're going to be releasing Entropia within, you know, we're not sure yet, but a few months potentially. But be sure to just check out the X account for that, which is Entropia Trading, I believe. We greatly appreciate it. I think you lot will find what we're going to be working on there really powerful. And yeah, I'll catch you later. Hopefully you found this video interesting.